What is going on to the AMC stock family? In today's video, we are going to be talking about a serious issue related to Citadel, which is owned by Ken Griffin, and how this is going to relate to AMC, because anytime Citadel makes a move, it affects AMC usually. And so with that being said, we are also going to be talking about the AMC share price and expectations for August 16th, which is a Monday and tomorrow. So anyways, with that being said, Ken Griffin's Citadel Securities fights back to block rival from using a leaked algorithm. So we have some sort of rival already, and so algorithms, they're very expensive, right? People spend thousands of dollars to even go to a lot of these computer science classes and to build a lot of these algorithms that are based off of a lot of computational mathematics. However, because someone else has this algorithm, Ken Griffin is not too happy right now. And so Bloomberg decides to say that Citadel Securities told a London court that officials at a British hedge fund, GSA Capital, already have the information taken from a secret algorithm that is at the center of a lawsuit. So basically, there is a British hedge fund and they have the algorithm. And as you guys all know, when someone has an algorithm, can they really decide to just forget about it? Probably not. They usually have that algorithm because they now know what it takes to build that algorithm. Remember, in the beginning, we just talked about how these are based off of computational mathematics. And so as long as you know how that problem was able to be solved, or in other words, as long as you know how that algorithm was built, you basically know everything there is about that algorithm and what it could do to solve a problem. Now, with that being said, continuing on with that, the US firm founded by Ken Griffin is seeking around $40 million over claims that GSA, which is the British hedge fund, obtained a secret trading strategy from a senior trader at Citadel Securities while using WhatsApp. And so, in addition to the damages, Citadel Securities wants to block GSA from using the trading model. I'm not sure how they will be able to have GSA completely blocked from the trading model because, after all, if they know how to build the algorithm, what else is there to have them blocked? However, with that also being said, they're asking for a $40 million claim just because apparently GSA has this trading strategy. And so trading strategies help a lot of hedge funds become profitable. And apparently this was taken from a senior trader. And you guys already know these senior traders, they are very much professionals in the financial field. And so that's why, coming from a senior trader, this senior trader probably has at least a decade's worth of trading experience. This must be an amazing trading strategy. Otherwise, Ken Griffin would not be wanting to seek around $40 million from GSA, and also they probably wouldn't even have a problem to begin with if it was just a simple trading strategy. We must continue reading because Citadel Securities claims in a lawsuit that GSA gained confidential information on a crucial automated trading model known as the ABC strategy that cost the firm more than $100 million to develop. And this is exactly what I was talking about just a few seconds ago. A $100 million model to develop, that is no joke. And coming from a senior trader, as I said, this model must be phenomenal. And this model has a $100 million price tag. And actually, it's even more than that, right? Because it costs the firm more than $100 million to develop. So the price tag on this model is definitely well over $100 million. And so with that being said, GSA insists that there was no secret sauce and a high-level description of the structure of a trading algorithm. And so this is very controversial because no one knows how much math was used in this trading model. Trading models, as we all know, they are very complex to design in the first place. And if you were to tell someone that it cost someone to make a trading model that was worth $100 million, they would think that you're crazy. So that is what basically GSA is saying. They're saying that there is no secret to developing any sort of algorithm. However, obviously, that is what Ken Griffin and Citadel disagrees with. So the damages claims won't be decided until a trial in 2022, with Citadel Securities asking for the final amount to be determined later. While discussing the potential size of a damage claims, Judge Thomas Linden noted how realistic that is. You may have different views. Spokespeople for Citadel Securities and GSA declined to comment outside of the hearing. The case filed in December lays out the steps that the firms will take to protect automated strategies where companies deploy computing power to identify trades promising the biggest mismatches or largest payoffs with the least amount of risk. Only 15 out of Citadel Securities' 3,000 employees had access to the strategic logic of the ABC strategy, Craig said, of the ABC strategy. This is absolutely insane. I did not know that this trading strategy was this important to Citadel Securities and Ken Griffin. Only 15 out of the 3,000 employees that work at Citadel, and you have to understand that the people working at Citadel, most of them are probably already professionals in the financial field. So you are only allowing 15 of these 3,000 people having the trading strategy, or in other words, this strategy is called the ABC strategy. This strategy must work in all honesty, because why else would Ken Griffin be asking for $40 million over this claim? And now they're trying to take further steps so that this never happens again, where they don't have other people using the ABC strategy or any strategy for that matter. And so someone else who was previously the head trader for the strategy in Europe and a quantitative researcher who is looking for a move after the 11 years at Citadel. These quantitative researchers are skilled with mathematics, and so continuing on, this article states that as part of the unsuccessful recruitment decisions, someone provided GSA with a trading strategy plan that Citadel Securities argues is based on its own model, including the way the algorithm made predictions. And so with this algorithm, wouldn't it be amazing to have some sort of computer telling you when to buy a stock, when to sell the stock, what is the quantity amount that you should be invested in a stock, right? That would be amazing. And quite frankly, with only 15 people having this trading strategy, the ABC trading strategy must work pretty well. And so ultimately, in the last few paragraphs, this article states that GSA, in its own filing for Tuesday's hearing, said that it has no plans to run a high-frequency strategy for trading stocks. And so how does all of this relate to AMC stock? Well, what if this algorithm was indicating to Citadel to decide to start selling a lot of AMC positions? Because we know that Melvin Capital, from the previous video, we know that Melvin Capital basically asked Citadel for emergency funds. I believe it was $2.7 million. And so why would Citadel decide to agree to all of this if some sort of algorithm did not indicate to them that they should be the ones helping Melvin Capital, because they were in a 53% basically underwater and they lost 53% of the entire hedge fund, or at least that is what I understood from the previous article. And so going off of that, what if the ABC strategy is still indicating to Citadel that they should be the ones selling AMC stock rather than buying it for the long term or for a day trade? Because we know that even if you're a day trader, as long as you are buying this stock, it will still benefit the AMC stock price, maybe not in the long term, but definitely as the momentum continues on a day-by-day basis. And so this may be a problem for Citadel in the future, because margin calls is a very serious problem now to a lot of institutions, to a lot of banks, and to a lot of hedge funds. And so Citadel may be at the risk of having margin calls if some sort of strategy, it may not be the ABC strategy, but it may be some sort of trading strategy that makes Citadel decide to sell even more AMC stock. And then at that point, what if AMC stock decides to have an insane increase in share price because of that short squeeze that a lot of people are expecting for AMC? And actually, I'm going to be talking about the AMC price right now and how the AMC price level is at an insane support level, and it looks like we have more resilience in the stock because of somewhat of an increase in volume. And so with all this being said, Citadel may be at the risk of margin calls in the future, and they may be at the risk of going bankrupt. Now again, none of this is confirmed because we don't know how much Citadel has lost from AMC stock, and we don't know, have they lost 50% of their hedge fund, have they lost 20% of their hedge fund, have they lost 80%, or have they lost nothing of the percentage of their hedge fund. And now we are going to be talking about the price for AMC stock, and we already understand that the volume is slowly but surely starting to increase in the stock. And that's because before, AMC stock had a negative price volume, which is indicated by the red volume bar. However, now we have not one but two volume bars indicating that we are green for the volume. And so the volume is also being followed by the candlesticks. And so the candlesticks are really what matter at this point. And so what is that support level that I was talking about just a few seconds ago? And why is this so pivotal for AMC? Well, if we understand what the support level is, that'll be helpful first of all. And so this support level is going to be the $35 support level. So the reason for this is because AMC stock, this used to be a support level once. And so now we are understanding that this is actually going to be the resistance, right? It used to be the support, now it is a resistance. And so AMC stock was actually very close to this level just a few days ago. And so with that being said, AMC stock, yes, it does have a few wicks on both the candle bars, which means that there is yet to be enough volume to sustain the top of the candle bar. And so as long as we sustain the top of the candle bar, which can only be done if there is more demand, and more demand is caused by more volume of people buying the stock rather than selling it, and that is when we will get closer to this $38 support level. And then from there, AMC stock has no other choice than to break the support level. Now remember, I'm not a financial advisor. This is just what I'm thinking, because every time AMC decided to break $38 a share, it was usually followed by an increase in the price surge, meaning one time it went from $35 all the way to $44 a share, even $47 a share. And then another time it went from $35 to roughly $37 a share. Now I know $37 a share and no one wants to hear that. However, that was just what happened once. And honestly, with the more volume in AMC, after the amazing earnings, I don't understand why AMC stock wouldn't be able to at least have a double top, meaning that AMC would have not only one high being formed at the left, but actually at the right, meaning that AMC stock would have a retest of $44 a share. And so with that being said, AMC stock group, now we know the support level. We also know that AMC had pretty good earnings, and so it was not the best. However, it was better than what a lot of investors were expecting for AMC. And so with that being said, that's why AMC actually went to $37 a share. It was because of that earnings beat to some extent, but the fundamentals of this company is not the strongest just yet. And so with that being said, AMC stock family, thanks again for watching. I'll see you guys in the next video.